All right, well, hello again, traders, and welcome out. This is Hawkins from Maverick Currencies here, and we are back with another market roundup. It's a Monday, it's a June 6th. Hope everyone had a good start of the week. It's certainly a good, decent day in the markets, so it's always nice to start off on a bit of a better note. There's definitely a lot going on in the market, so let's talk about it. Let's see what's really moving the markets, talk about our plan that we discussed in the currency room, and see what kind of adjustments do we need to make based on what the markets have told us so far. So let's do a quick market analysis and then take a look at the market price action. And as you can see in the price action today, we actually saw a bit of a modest gains. But one thing to note, that market did rally overnight. We were up about 1.5%, but then gave back most of the gains. So whenever you get this rallies and then give up most of the gains, that's not really a good sign. And that's exactly what we saw in the crypto markets as well. We saw a bit of a rally early on, but then again, we give back most half of the gains towards the end of the day. So the market continues to be in this tug and pull environment, which again is not a great environment either for a bull or for a bear. Every time you look at the markets and say, oh yeah, I think it's going to rally, it pulls back. And vice versa. You try to stick your neck out and try to short the markets, and then next thing you know, you see a bit of a rally. So we expect the similar kind of price action to continue. As you look in the charts over here, what we're getting here after this rally towards the end of May is now stalling, and we are a bit of a range bound here in the last few trading sessions. You can see market hasn't gone anywhere, but if you pay attention to these candles, they have been convincing at times, but usually in these kind of market environments, you want to wait for some sort of follow through before we want to jump on. So similar story across the board. If you take a look at the VT, which is the stock market index, the world stock market index, and then same thing, we're seeing a bit of a high base, or it's a bit of a base, you can say, that's forming. We actually just did establish a higher high in this trend, but right now it's pretty unclear which way the market wants to go. And similar thing we can find in the crypto world. And as you can see, at this point, it's not really worth taking a look at these percentage gains for the day to day, but just take a look at overall price action and see, does it really break out above? But at this point, this is a very nice low base forming, which eventually is likely to break lower. So I think the bigger move is still on the downside in the crypto world, and this little rallies that we are seeing, I think they are likely just to be good shorting opportunities. And then in the currency world, we did notice a bit of a continuation in the yen. Yen remains weak. If you take a look at dollar yen today, it rallied to the highest level since 2002. So the yen is in a -3, which is very directional. And usually whenever you get something like this, it's better to just stick with that direction until market tells you the move is over. And right now, the yen remains weak, and I think it probably have further downside risk. And if we take a look at some of the pairings that we've been watching, like the dollar yen or even the CAD yen, they have worked out really well in this past few days. And even today, we started off with a nice movement there. On the surprising end, we saw Swiss franc did pull back, and that was something we have been watching. But today was the day where the Swiss franc did decide to pull back. So let's talk about our outlook for the markets here. And as you can see, we're sitting at a 0, which means that we're not really bullish nor really bearish. We want to take advantage of opportunities, but we're not really looking for establishing a trend until we break the highs or the lows of that range. That will give us a bit of an indication it wants to continue or wants to pull back. But at this point, it's 50-50. It could go really either way. So always understand the market conditions you're trading, and we can constantly go from a directional to a range bound to volatile to non-volatile. And as a trader, you need to identify when that happens so we can pull our expectations accordingly and trade the markets. So let's talk about schedule. This week, definitely excited for some of these news events like the RBA that's due tonight. And we also have ECB on a Thursday, and we got some employment report and CPI on a Friday. So I really like how the week is kind of stacked up with these news events. So starting with the RBA, we'll be actually meeting live for this. As you can see, the expectation is there for a rate hike. As I was reading some articles, again, it seems like about 0.4% rate hike is there's a 70% chance for that. So it seems like there's a lot priced in. Remember, last time They were expected to do 0.25%, and they surprised everybody with a little bit more. So it was a 0.35%. So it'll be interesting to see if this comes out hawkish, or is this something that's already priced in. So we always need to take a look at both case scenarios. Remember, we don't always want to take this rate hike at its face value, because a lot of times the price actually got priced in, and that's where we see a buy the rumor, sell the news. What can push the currency higher is a further hawkish statement or a surprise that the markets are not pricing in for. So we'll be talking more about this tonight. So make sure you go register for the class so you can get the link. So let's do a quick currency analysis and cryptocurrency analysis. Let's take a look at how things are moving percentage-wise. And now taking a look at crypto world again, of course, we are seeing some movements, bigger percentage gains. But the problem with the cryptocurrency right now is that it's hard to find a consistent back-to-back move. Even though we get a couple of days up, they get quickly erased. That's the last thing you want to see if you're trying to hold something and trying to find a bottom. I think cryptocurrencies are not a good buy. And if there is a good update for the day, I think that's just a day trade. You have to kind of look at it from a day-to-day perspective. Now, let's talk about currencies. Quite a sporadic movements across, because if you take a look at Aussie and Kiwi, which has been running in the past few days, they were not the mover for the day. Euro as well did not move. So where we are seeing continuation, we saw the yen continues to weaken, 0.62%. And actually, we had the dollar did well as well. And that's giving us a bit more extension from Friday's move after the jobs report. The dollar did strengthen, and then here we are getting a further strength in the dollar. So I think we need to pay attention to dollar cross or dollar basket, because as we discussed in the currency room, dollar is at a bit of a cross point where it could go either way. And until it breaks that 50-day moving average, we're not really looking to short it. But as far as the long goes, you need to be cautious. So where we were surprised, and again, the Canadian dollar as well continues to push higher. So the best pairing right now, as you can see, is really CAD yen that continues to be in this record territory. So we'll take a look at charts when we jump live into a trading view. The surprise today was that Swiss franc was weak, which again so far has been sideways for the last few days, and suddenly decided to actually break lower. And we'll talk about it. The Swiss franc was pumped up after the surprise comments from the Swiss franc chairman about fighting inflation with rate hikes, and that again, I don't think until we see some actions, these are just going to just inflate it for the short term, and then we'd see a bit of a correction. The only thing is timing. The Swiss franc definitely consolidated for a while before it decided to pull back. And the British pound seems to be having a better day. Again, remember, this is the one that we had a -2 on both in turn the velocity. So it really changed the velocity for the day, which means that there was no trade on the pound that I was actually looking forward to. So as we take a look at velocity scores, you notice that there's cryptocurrency stayed at a +1. But let's just talk about the extreme ends. Swiss franc and yen on one side, which is at a -3. Actually, we had the CAD as a +3, but we also have a dollar as a +2 and the pound. So the best pairing, like I said, has been CAD yen. Even if you take a look at CAD Swiss franc, they both had a really decent move. So one takeaway from this market is that there is the continuity that you're getting from certain currencies like CAD and the yen. And then there's certain currencies that are just going back and forth. Aussie and Kiwi were alarming as we got that back and forth movement in the equity markets. These two currencies have been holding off. So this is where the risk is. If the markets do deteriorate, does it really start to affect the Aussie and the Kiwi prices? So again, right now, Aussie's sort of staying elevated ahead of the rate statement tonight, but I think something we need to pay attention to after that as well. So let's talk about possible trades and then jump in and see where we can find an opportunity and take a look at some of the key technical standpoints. So let's just start with the dollar, because dollar, let's go on a daily chart. And as you can see with the dollar, we did notice it tried to actually break out a little bit above, and it's going on a daily chart. You notice that this is the level that we discuss, that this is not a short until it breaks that low, and it's not really a long until it breaks that high. So we are exactly right at that top of that point here. So if you're looking for continuation, I think we need to break above this level. And for that, we need to just wait for the overnight price action. and see if we get a continuation there. But let's talk about other pairs that have been constantly making new lows, and here we are, the Japanese yen. This price action actually started to remind me a lot more what happened here. So we are at certainly at this record levels. I mean, if you go on the monthly chart, you notice that this yen basket I have, it goes back to 2007. This level that it acted as a support. But for other pairs, we are certainly pushing levels that we haven't really seen for decades, and that's a long time. Especially, I mean, myself, I've been trading since 2008, and I have not seen levels that we're currently at. I mean, take a look at the monthly chart on the dollar yen, and remember, this is the one that we discussed in the U.S. employment report class, and actually worked out perfectly since then. It's broken above the resistance here, and at this point, there's no strong resistance until it hit that 133 to 134 level as a nice resistance level. And remember, that's the level that we saw back in 2002. So we look at where we are right now. We are back to this 2002 levels. So I think 134 could be a decent level of resistance before it really decide if it wants to pause. But right now, I think what we are getting is this movement, that's driven by central banks. There's a huge negative the carry trade that if you take a look at the Bank of Japan, it remains ultra dovish, and everybody else is actually now talking about raising rates. So there's a huge discrepancy between those policies that is going to drive these movements higher and higher. Let's talk about CAD yen. CAD yen was the one that we've been actually having on a watch list, and here we are. A daily chart, it looks beautiful. I mean, it went from 99.59 to about 104. That's a 500 pip just in the past few days. If you go on a monthly chart, you notice that we are actually breaking resistance here. So whenever we are starting to break these key resistance, this is the right movement. The easy movement is the path to like the resistance over here. So I think this is where it could actually stretch further as this price action continues. So I think with the yen, you want to stay short until the price action tells us that no, it's actually finding a short-term bottom. And right now, I can say I'm not really seeing any sort of reversal sign or a bottom sign yet. And remember, whenever you see something like a -3, you need to be very careful, because that's like catching a falling knife. A lot of times you want to chase it, catch it, but then the next thing you know, you just keep breaking. And don't go after these, okay, it's been down for 5 days, so it needs to bounce back. Just look back at what happened back in March. You can't, every time you think it's bottomed out, it actually did go down further. So price action is what really will tell you if this is in for a bit of a reversal. Now let's talk about Swiss franc. Now look at the Swiss franc. It did hover around this level, and like I said, it had a huge rally off of this Swiss Bank National, the SNB chairman, the comments there, and you can see we actually had a nice rally that extended for not just a day but multi-days. It's up about 2.75%. Here we are, nice little pullback today. I would love to see a bit of an inside candle and then it pulls back further. I think at this point we need to see some actions from these central banks in order to sustain that move. And I think at this point, this made a nice little reversal. So let's go to a 4-hour chart. So 4-hour chart, we got a nice support over here. We broke lower. So let's just see if we can get a bit of a base or a little bear rally. I would love to short that into. Outside of that, the big focus really is the Aussie. As you can see, that Aussie is just holding steady. And a lot of times, we get a run up into the price and into the event. And you can see that we actually have seen a run up in the Aussie going into this event. And so far, I think a lot is pricing in. So I would be not a buyer on Aussie right off the bat, but I think this could be a great opportunity to fade that move if there's an up move in the Aussie. The only thing that can save the Aussie or protect the Aussie from any downside, if they actually are more hawkish in their statement and they want to continue hiking rates, that's the only thing that would actually make a change. But otherwise, I think at this point it looks extended here. If we take a look at Aussie Kiwi, I mean, we're actually just hovering around this key resistance level that goes back to, at least a few years back. So as a trader, again, if you're noticing these moves that you haven't seen for years, it's always nice to back out and see, okay, what happened where else I can go back in time to see where the previous level of resistance was. And right now you can see that if this Aussie Kiwi can clear out this resistance, then its in sight is about 113.20. But right now, this could go either way. But right now, pricing in wise, I think Aussie is running into the RBA statement against some of the currencies. It's staying elevated, so it will make it interesting to trade. So tune in. We'll be trading live. We'll look at the price action and then jump on a position accordingly. But outside of that, I think it will create a good opportunity. You want to take a look at both case scenarios. Aussie strong, Aussie strength versus Aussie weakness. If Aussie stays weak, I don't mind shorting Aussie CAD. Based on the price action we're getting here, I think CAD still looks like a good long. Even if you go into this Canadian dollar basket, you'll notice the CAD has actually just made new highs. Let's also talk about yields, because I know the market, everybody's actually paying attention to the bond yields, and you can see that we did pull back and here we are rising again. So I think that is going to give markets a little bit harder time as the yields go higher, put some more pressure. Bond markets, you can see TLT actually now back to the lows over here. So at this point, let's keep an eye on dollar, because I think if the dollar has been following these correlations, and if the yields are back up again, I think the dollar could stand a chance to go up as well. So for that, I do like Aussie dollar today as well. I like it based on the weekly chart. I mean, if you look at it, we are right at these downward moving averages here, 20 and 50, and then here we are making a bit of a short-term reversal. So resistance is right here. I think if you can roll over, this is a nice little 3-week bear rally to short into. On the daily chart, you can see there's a bit of a trend that's up, but it's not really giving us a signal that it's ready to roll over yet. So it looks much better on that weekly chart. Daily chart, it needs to break lower further, but then if you go in an hourly to a 4-hour chart, we're actually noticing it's testing that resistance. So this is going to be a news event trade. Again, I would love to see the Aussie actually go up initially, and then that would be a good shorting opportunity. So that's the one trade that I'm paying attention to. Outside of that, we'll be backed with the dollar pairs. I think dollar yen. I think its in sight is the 134 level. So there's still a little bit of room for this to run. Dollar Swiss franc, as you can see that it did break above this downward basing setup here. I mean, this could be a nice little low base setup. It broke out. I would love to see a bit of a pullback then to buy into. So good setups around there, good movements. It's just being a matter of being in the right place at the right time. If you missed the move already, no problem. We got the RBA tonight, and I think tomorrow will give us another good trading opportunity. So that's the focus here. I think market's likely to stay in this consolidation range. So whenever you get that, a couple of up days with a couple of down days, just don't be as convinced of a movement because market's likely to get both the longs and the shorts into the markets, which makes it difficult. So yen and Swiss franc remains a short. CAD dollar remains. I mean, I think I put that in a long one. Aussie is a bit of a question mark, staying bearish on cryptos, but I think Aussie is the one that likely to be pricing in a rate hike. If there's a change, we'll cover that in the class and then make adjustment to our outlook. Thanks everyone for joining. We'll be again seeing you all tonight at the RBA class. Till then, take care.